This demonstration is designed to instruct you on using MetaStock software and accompanying plugins. It is not a recommendation to buy or sell exchange-traded instruments, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented should only be used by investors who are aware of the risk inherent in trading. Thomson Reuters shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company.
Hello, this is Dale Brethauer. I am a mentor with Pacific Trading Academy, and it's my pleasure tonight to talk about how I use MetaStock, the advantages of using MetaStock, and what I do is I put together a portfolio of I use fundamentals and I look at financially strong stocks for that portfolio. Then, because those stocks will outperform the market, then I go to MetaStock and use the myriad of indicators that are available. I've actually developed my own binary indicator, which couples 6 indicators together to give me a bullish bearish read. And I want to show you how I use, first of all, the financially strong stocks along with the indicators to maximize the profitability of that portfolio. Okay, beyond that, as a mentor with PTA, I've taken a challenge to try to increase a $50,000 portfolio, and my goal is to actually try to double this in a year by using the techniques that I teach my students. And they are basically to have a portfolio of financially strong stocks, to use the MetaStock indicators, especially the weekly MACD, and my own proprietary binary indicator that I developed. What I do is every night I put on a blog, and this is an example of cover sheet for that blog. This was from June 10th, and I talk about the portfolio of stocks and what trade recommendations I would have for the day. On this particular day, I was looking to exit the trade in Allegheny Technology, ATI, and also exit the trade in AXP, American Express. Now, the one thing I want to make clear is these are not recommendations to buy or sell. These are trades that I am making in my account. And my mentees follow this. These are not recommendations. Pacific Trading Academy is not a brokerage firm. What we teach our students in the programs are not trading recommendations. Our instruction is for educational purposes only, and they should not be construed as recommendations. But what the students see, and this is a great education for them because they can actually see why I am making a trade, what indicators I'm looking at, on what stocks, and how to use this. So it's a reinforcement tool. Well, in the meantime, I'm trying to keep track of how I'm doing with this to show them that indeed this is a profitable strategy, and therefore the challenge to try to take $50,000 to 100 in 1 year. This is the link to my challenge blog, and everybody that is listening to this webinar will have free access to this. The link down below is http://PTAUSA.wistia, WISTIA.com/activate, ACTIVATE/F00DAA53. When you click right into this link, you will be able to hear my nightly blogs. I usually put them on before 8 o'clock Eastern Time every evening with the recommendations of my trades for the next day. I'm actually I'm showing why I would make these trades before the trade is actually being made. And you can follow this for free. I'm going to be doing this for a year. I started the end of March, and I will be continuing on till next March. Currently, the portfolio is up a little bit over 15%, so it's doing quite well. If it doesn't reach 100%, I'm not real worried about that. That is a goal. It's a pretty far-reaching goal. But this blog is really to show people a powerful strategy on strong stocks and how they can make money in the market. On this chart, I'm showing the black line down here is the S&P 500, which has been normalized. Let's see if I can get the arrow on that. Okay, this is the S&P 500. It's been normalized for the last 10 years, so it's about zero. And what you're seeing on the chart is actually how other stocks, financially strong stocks, perform versus the S&P. And you'll notice right here, this is the kind of gold line is Monsanto. Monsanto is, let me put that to full screen to see if I can see the numbers. Yeah, the Monsanto actually outperformed the market by about 850%. And this went up to 2008, and then it had a catastrophic drop, just like the whole general market did in 2008. And then off we go again. Okay, this is true for also Devon Energy. Line is Devon Energy, where it outperformed the market about almost 300%. Then it had a drop. This is PepsiCo, the mauve color here, PepsiCo. Not quite as powerful as these other two, but outperforming the market, and that's what we want. I put in a average stock, or one that I would consider a little bit financially weak, and that is SLE, that's Sara Lee, and you'll notice it pretty well tracks the S&P, if not slightly down. So these are not anomalies. I mean, this is financially strong stocks actually outperform the market. And this kind of flies in the face of random walk theory, or you can't beat the market. Yes, you can. With financially strong stocks, they outperform the market, and that's the fundamental side of how I have my portfolio. Now, if I can have indicators that will get me out up here, get me back in after this portion has happened, that is perfect, because now I've got something. Actually, let me go to the next chart, which is actually Monsanto on the bottom. Let me go back here to 2000, where Monsanto was $8-9 a share, all the way up to the about mid 2008. It was up to 150, 160. That's a 20x increase. A 20x increase in about 8.5 years. That is the kind of stock I want to trade. That's the one that I want. However, I want to get out and not take this down, right? Because Monsanto went from about 150 all the way down to 65. It gave back 50% of what it had earned for 9 years. This is true with a lot of stocks. In 2008 crash, a lot of stocks lost a lot of their value. A lot of people that had mutual funds or had 401ks, their accounts were drastically hit because of this phenomenon. Well, what I want to do is I want to take this rise up, but when it gets to this area here, I want to get out. Enter the MACD. And not only the daily MACD, which is a pretty good indicator, but the daily MACD tends to whipsaw you. You tend to get in and out too many times. I love the weekly MACD. The weekly MACD